Jerry, all these big companies, they write off everything.
It's a write-off.
It's a write-off.
It's a write-off.
It's a write-off.
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 You don't even know what a write-off is.
It's a write-off. One of the most used expressions around tax time, but perhaps one of the most least understood. If I can explain to you in under 3 minutes what a write-off is and how it works, then subscribe to my channel and like this video. This is Ben.
Hello.
Ben's a tradesperson, and in running Ben's business, I say Ben earns $100,000 of income during a year. We presume a tax rate of 30% for this example. So first step is that Ben has to pay tax on this income that he's earned. Ben will have to pay $30,000 of tax. Now, in the process of running his business, Ben will incur different kinds of expenses. And some of those expenses will be eligible to reduce Ben's overall tax bill. And it's these kinds of expenses that are called tax deductions or tax write-offs, being the types of expenditure that are eligible to reduce Ben's overall tax bill. So let's say in this example, Ben has to buy a work ute. Let's say he spends $20,000 on a work ute. Now, this is really important. Ben will not get this full $20,000 back when he lodges his tax return. I want to pause here because this part's really important. The reason when you spend $20,000 on a work ute or similar expenditure that you do not get the full $20,000 back when you lodge your tax return is because if you did, you would essentially be getting the ute for free. And then imagine that cost to the government reimbursing all the businesses for their different kinds of expenditure. What a tax write-off does is reduce the tax bill by the tax rate of the expenditure. So here in this case, it will reduce the tax bill by 30% of the expenditure incurred, $20,000. Ben does not get the full $20,000 back. He gets $6,000 back in the form of a reduced tax bill. Or another way to think about it is, instead of this vehicle costing Ben $20,000, with the benefit of the tax write-off, this vehicle actually costs Ben $14,000. Let's do another example. Let's say Ben has to buy some tools. He spends $3,300 on some tools. Again, Ben will not get the full value of this $3.3K back in his tax return. It will reduce his tax bill by the tax rate, 30% of the expenditure incurred. So here it will reduce his tax bill by $1,000. So these eligible tax write-offs have reduced Ben's overall tax bill by $7,000, bringing it down to $23,000. Now, some of these kinds of expenditure, when they're assets, some of these tax write-offs need to be spread over a number of years. However, there are different concessions available depending on the kind of taxpayer you are, being a sole trader or a small business, or the government of the day. Sometimes there are concessions available that allow you to take these tax write-offs in 1 year, in the first year, which can be much more beneficial than taking them over a number of years. On the ATO website, there is great summaries broken down by profession that show you some of the eligible tax write-offs that you can claim in your tax return to reduce your overall tax bill. To sum up, the tax rate of 30% was for this example only. The tax rate you will use will depend on which tax bracket you are in. Remember, eligible expenditure will not be refunded in full to you when you lodge your tax return. It will just reduce your tax bill by your tax rate, generally speaking. If you're lodging your tax return yourself, be sure to check the tax office website to make sure you're not missing out on any tax write-offs that you can claim to reduce your overall tax bill. If any of this was unclear or you'd like a bit more information, comment below and I'll respond to every single one.